A $309 silver target by year-end is going viral again after yesterday's crash. From $83, that's 270% in 7 months. We tested against the data. First, let's see what happened. Silver opened around $86.50 Thursday. It closed near $83.50, down about 4.6%. Gold held above $46.50. The 10-year Treasury yield touched 4.58%, a fresh one-year high. The macro setup turned hostile in a single trading session. Now the structure check. A major bank's metals research desk has been forecasting silver at $309 by year-end since January. The headline got pulled out of an institutional research note and is now circulating across Silver YouTube, X, and the bullion media as, quote, the forecast that finally makes sense after yesterday's sell-off. Here's what the data actually says. Let's do the math first. To hit 309 from yesterday's intraday low of $77, silver would need to rise 299% in 7 months. That's 19% per month, sustained every single month until December. Second, the historical anchor. The forecast assumes silver rises until 1 ounce of gold buys only 14 ounces of silver. That ratio existed exactly once, in January 1980, when the Hunt brothers were trying to corner the global silver market with billions in borrowed money. It lasted approximately 1 trading week. The exchange changed its rules. The Hunts were forced to liquidate, and silver collapsed 78% over the following 4 months. Third, the originating bank's own research head said the 309 number was a cap, not a target. In other words, the institution that produced the headline figure explicitly framed it as a ceiling, not a forecast. $309 silver by Christmas requires the fastest silver rally in modern history, anchored on a ratio that lasted 5 trading days before its only architect went bankrupt. The structural setup for silver is genuinely bullish. 6th consecutive year of supply deficit, record Chinese imports, the Federal Reserve cornered between inflation and growth. But the path from $83 to $309 in 7 months isn't supported by the historical record. It's supported by hope. Just a quick aside, subscribe and hit the bell for daily structure checks. It will help this channel grow. Now, back to the data. Here's what the data actually says about whether silver is moving toward that target. The exchange just published yesterday's vault data. Silver in the official vaults grew by nearly 2 million ounces, the 2nd straight day of building. The deliverable pool, the silver that actually backs futures contracts, grew by 500,000 ounces. The Asahi and CNT depositories alone took in over 1,200,000 ounces of new physical silver during a session when the price was crashing. For 7 straight reports, the silver community has been pointing to vault drainage as the structural setup for a parabolic move. The deliverable pool went from 77 million ounces in late April to 80.4 million yesterday, up 4% in 2 weeks. That's the first improving print in 7 months. Real metal is moving back into the system, not out. In other words, the inventory pattern that would precede the kind of squeeze required to hit $309, vaults emptying as buyers demand physical silver, is not what the data is showing this week. It's showing the opposite. Investors selling paper, industrial buyers replacing physical. Here's what to watch for. The $77 low from yesterday's session is now the reference point. If silver holds above $80 through next week's close, the sell-off was repositioning, not breakdown. If it doesn't, the sell-off was the start of something larger, the cumulative weight of hotter inflation, a hawkish new Federal Reserve chair, and a Trump-Xi summit that delivered nothing on trade. Monday morning's vault data will tell us whether yesterday's build was a single-session bounce or the start of something real. Watch the price, not the headline. And watch the vaults. 2 days of inflows is a trend reversal in waiting. 5 days is a trend. Structure checks like today's are what the Silver Catalyst does every issue. Silver2026.com. $1, 2 weeks of the newsletter plus the book. If you've heard a silver claim you'd like us to verify, drop it in the comments. Order is strength and structure is power. Until the next time, I'm the Silver Engineer.